Elite Masterminds, what's going on? This is Diamond Life, and so we're doing a review of yesterday's triangle trading. So this is 10 a.m. right here. Now this one here was a little tricky. This probably happens once every 2 weeks, okay? Meaning that the dealer's range was here. Okay, we created a low and a high on the bodies, and you see that it closed below. So that meant that price should have continued to go down like this, but we had a spike up. Sometimes I see these spikes up. Now, looking at the structure, I probably would have known that it had to come up to this area here. This is a bearish breaker, this red box. But I was going more based on the pattern. Okay. So let's look at this area where it stopped at down here. Let me zoom back out. So this is a bullish breaker that has been used and reused. This is what ICT talks about, that the structure will continue to remember these areas even if it's already used. Okay, this is what I mean. It broke out above here, right? It disrespected it here. Okay, then it broke out above it, and then it came back down and respected it. See, this is a bullish breaker. You got a low, a high, and then this low right here took that low. So this highest up close candle is important. Okay, so you see it broke above it, came back down, and tested a support. So this could have been an area to see why it stopped. Also, if you turn off the annotations, you see that we got strong support and resistance. You see this area went up, it went up, it went up. This area right here is a rejection area. Also, if you see price coming down, it rejected. It came down here, rejected. It came down, it rejected. It came down, rejected. So this line, if you just put a line right here, you also could have seen if price came back down where it would stop. All right. Just look at the triangle real quick. So remember, we always trade move 3. So if we seen this happen right here, this push up right here, we're like, okay, well, it pushed up here, then it pushed down there. Then you should have counted. You should have said, okay, well, if it closed down here, yeah, it should have went down there. And that would have been the first move. But we have to follow the structure. So this would have been move 1. So it's like move 1 and then move 2. And then from 2 to 3 is going to always return back to the first move. The first move was here. Okay. So you could have took a buy from this area right here, that break and retest of that bullish breaker that I just showed you, which is this green area here. You could have took a buy all the way back up to either this bearish. You could take a buy up to this bearish breaker here because you got a high, a low, and a higher high. Okay, so you could have just been conservative and just bought it all the way up into this wick low here, or maybe 50% of this body and just got out here or here, right? Or if you want to really hold, because sometimes it won't make it up there. It won't make it to the return. This is move 3. So let me see how much time I got left. So again, when it closed down here, based on the way we do this, it should have, this part right here should have pushed down here to the area that we would have identified on the chart. You see price was rejecting right here. So if you seen price pushing down, most likely it would have stopped here. You could have been a buyer here. Okay, with a stop loss below this wick. All right, so it would have been kind of close. But the whole point is move 1 was here. Move 2 was down to here, and move 3, that's what we trade. We trade from 2 to 3 back to the origin, okay, which is up here. Okay, but sometimes it will fail at the structure levels, which is a bearish breaker. So that's a triangle. Thanks for watching.